Hi, Greg from Trump Trader. I wanted to talk about how to spot your own opportunities in the markets. Now, the way I trade, I'm just going to give some advice. It's not the end all be all of trading, but it works for me, and it's very simple. It just takes practice. That's all it is. It's very important to be able to rely on yourself and be responsible for your own trades. That way, you learn from them and you become a better trader. If you rely on someone else's advice, you're not really learning anything and you're relying on other people. So that's what I always advise for people to do. It's fine when you're starting out to look to see how people trade and see what suits you the best, but in the end, when you start to gain some knowledge, it's important that you understand how the market moves. Starting off, we're looking at the 4 hour on the Euro US. It's November 24th. I just have a trend line drawn out. This is a bottom daily trend line, and this is one that it seems to be respecting. And I have another line drawn out here. And so basically, when I look at the market, I kind of look at the overall picture at first. I look at the 4 hour, 1 hour. So we'll look at the 4 hour here, and you can kind of see, I'll draw out for fun. Okay, so the price is respecting this line as well, but it's also respecting this line, which is very important to mention to you guys right now that no matter what time frame you're looking at the 15-minute, so the trend line or the price, the chart after it, so looking at the 15-minute chart, the 30-minute chart has precedence over the 15-minute. The 1 hour chart has precedence over the 30-minute, and the 4 hour has precedence over the 1 hour. So if you have a trend line drawn out and it goes up to a certain point, but your 4 hour trend line crosses and it's actually blocking that trend line from going past, if you're looking at the 1 hour, while the 4 hour is going to have more power than the 1 hour, and you always got to keep that in mind, whether you're looking at the 1 minute or 5 minute. That's just the way it works, but you can use that to your advantage. Let's look at an example today. Let's look at 15 minutes. This is today, and I'm going to draw out something that I see here. I see a basically like this. You don't have to draw perfect trend lines. This is just an idea to tell you how the price is moving and where it's going. It doesn't have to be perfect. I don't have it closed here on the close of the candle. It's going through this one, but this is how my brain perceives the price to move, and it works. So, and I'll draw another one, basically like that. So again, I mentioned that channel trend lines. This is a way to guide the price to a certain point. Now they can be breached, which it was here, and which it was here, but they can re-enter, and when they're done with their directive, which was whatever this price, they're not really used that much afterwards. And the reason why I say that much afterwards, because I'll show you in a second. But to draw it, we look at for the first 2 points, the first highest 2 points. Now I like to wait, like I wouldn't trade this. I'd like to wait until we have two nice straight lines that seem to be perpendicular to each other. So I would trade here, and I would trade perhaps here and here, but most likely here, and my stop loss would have been above this point. That's how I make a trade. Is I would put a short in here. My stop loss would be above here, just in case it does breach this trend line. You're still in, and you're still in for a good move, and you just got to protect your profit when it goes down. So basically what happened was the price left this channel, came back in, and then left it at this time and price here. This obviously tells you that the price target was hit, and this channel was really no longer much in use anymore. Now what happens? Well, the price went up near its 2-day high, and then look where it comes down. It comes down and it retraces on exactly what this trend line was, or near and abouts if you had this drawn out a little bit differently. But you can anticipate this move a little bit, put in a long here with a stop loss of about 10 or 15, and look for about a 20 to 30 pip gain there on this one trade. And you got one or two shorts here with some very nice tight stop losses of around 10, but you're going for around 20. So we always aim for 2 to 1 or more. The more ratio that is, the better. Now this is just on the 15-minute chart. All of what I'm saying happens on every time frame, and it happens time and time again. So if you even look at the 1 minute, if I can zoom out here, and I'll just show you. This is actually another good example. So this is within a couple hours. This is all today. I'm going to draw my trend line roughly like that. Draw my other trend line roughly like that. Take that off. Now look what happens. So we know that 1, 2, 3, 4, 5, roughly 6. Again, channels can be breached a little bit. You have to think of them as you know, a weak tree that can bend once in a while, and that's why you have to be cautious when you put in a buy. You can't just be super tight about this long here and then put in a stop loss here. I like to have it so we get a good 10-15 pip stop loss, and then you aim for a 2 to 1. But one thing to note is that, okay, so we know there's congestion here. This green bar that you can barely see here and here. So we have 1, 2, 3 solid places that it hit. Now, one thing to watch out for that's very important. So again, we're looking at the 1 minute, is the fact that the higher time frames have precedence over. So this, for example, could be in play because 1, 2, 3, it goes over the higher time frame precedence. But you don't even necessarily have to know that. I'll show you something. What you can do is you start to look at, okay, this price didn't actually have enough momentum to stay in line with this trend line. Okay, that's fine. It retraced to the bottom trend line, tried to make its way back up again, but was unable to get past this prior high on this 1 minute time frame. So when it does that, you got to be prepared for a breach of the channel. That means it's done with its target. This channel is no longer valid, and it makes a new channel. That's very important to know. So on the higher term channels, on the 15-minute, it's likely, not all the time, but it's likely that it will come back down and retrace. So I like these high probability trades. But on the 1 minutes, and the steeper that they are, so see how this one's not that steep? This is a fairly steep angle, but not that steep. It was still able to come back to retrace. Steep ones like this 1 minute one, it's too steep and too thin for it to retrace to. That means it would have to have way too much buying power to come in back to retrace to that. So anyways, that is just a couple of things, a couple of ways I find opportunities with. I'll be doing a second part to this with some more examples, so hopefully this was helpful. If you can practice that, even print out 1 minute, 5 minute charts, 15-minute charts, and just draw out those trend lines, and just watch what I'm looking for when the price leaves these little lines, these channels. Watch if it comes back to retrace. Watch what angle it's at, and so on and so forth. If you have any questions, email me at greg@trumptrader.com. I look forward to hearing from you, and I'll add a second part to this shortly. Take care.